from the Crypt.
What is up, freaks? Welcome back to Tales from the Crypt. It's another hot New York City night. The humidity is persisting. It's not letting up. We're drinking bourbon. We moved on from the rosé. Had a nice thirst-quenching rosé with John Newberry last night, and also a good conversation. But tonight, I feel like we're going to get a little drunker. We're going to have a little bit more fun. Less alert. We had fun with John last night. It's going to be less technical than the last episode. I'd like to introduce you freaks to Dhruv Bansal.
Hi, everybody. Thanks for having me on, Marty.
Thanks for coming on. For you freaks that don't know, Dhruv is an ex-physicist, serial entrepreneur, and currently the co-founder at Unchained Capital.
That's right.
I discovered you earlier this year with your Medium post on HODL waves.
Right, that's right.
We'll get to that in due time. First, as always, let's hear your tale. How'd you find Bitcoin? From what I can tell, it's a pretty interesting story.
Right, and we were joking about this even on the way up here, that I really enjoy telling the story because there's a person I'm looking for from this story that I've yet to reconnect with. So I first heard about Bitcoin in 2011. I was working at the last company that I had founded. It was a big data and technology company. It was called InfoChimps, like information and monkeys. It was awesome. We were a young company. It was my first entrepreneurial thing I'd ever done. I was at a conference in Portland. I was talking about my product. I was really excited. And one of the people who attended like this little event that we were having, who was, I guess, somewhat interested in our technology or what we were selling, turned out just to be this fascinating character. He was a mathematician. He was wiry. He was wearing a kilt. He had just so much unbounded energy.
Was he Scottish?
No, I can't imagine in any way that he was Scottish. I wish I could remember the man's name, because then I could stereotype and decide where he might have been from. But no, he was from Portland, as far as I know. He taught math at I think Portland State or something. Really interesting guy, really smart, like clearly the kind of person that has marches to his own drummer, so to speak. The event ends. And I was there with a friend from work, and she and I are just like, well, where do you want to go next? And this math guy's kind of hanging out with us. We've really enjoyed chatting with him so far, and so we proposed going to dinner. He says, I know this strip club that has like the best food. It's right next door. So fine. When in Portland, I heard that there are a lot of strip clubs in Portland. Fine, we'll go there. And my friend, she was awesome. She's a very cool person. She did not mind at all to go to a strip club where women were on display. Turned out not to matter, because as soon as we got to the strip club, he started talking about Bitcoin, and it was like it wouldn't have mattered what else was happening. We were just like, so explain it again how this works. Like, so who has invented this thing? Like, why? What does it do? And
what was this guy's pitch?
He wasn't really pitching so much as he was honest. He was educating. He was in that evangelist phase. He's like, here's this thing I just learned about, which is amazing. I want you to learn about it. I feel like you could appreciate this. I want to tell you about it. He was in that enthusiast stage. And God bless him, he was a mathematician, so he could speak to it at a high level. He could talk about, cryptography and asymmetric functions, and I'm kind of a math and physics guy, and so I could catch what he was throwing. And I thought it was so cool. I thought it was like, what a remarkably, in particular, the solution to the double spend problem, right? Proof of work as a solution to the digital double spend problem. Like, what a cool thing to have thought of. That also solves no actual problem that anyone has, and I can't believe, like, it's so cool that people work on this, but this is also useless. But I mean, mathematicians, right? So it's sort of par for the course with mathematicians that they work on cool things that are completely useless, and are proud of that. In fact, I think if you ever read like the Mathematician's Apology, it's like very much the way a mathematician likes to live their lives. And so,
is it a form of masochism?
I think it's a form of virtue signaling. Like, okay, I'm so smart that I can choose to work on the most esoteric and useless things, and I'll still have a career. I guess. Or maybe just the esoteric is what's interesting. And so certainly I was interested in the idea. I was like, this is really cool that you've come up with this scheme that I accept solves this problem. But I couldn't see why that mattered. Like, why are you working on this? Who cares? Like, I didn't have any money at that time. I knew nothing about how money worked. I guess 2008 had just happened, but like a few years before, but it hadn't really affected me. I was a young entrepreneur, and before that I was a physicist. So I was sort of outside of the realms that were most directly impacted by what, let's say, the government bailout of the banks or other things that, if you were more aware perhaps, or if I thought perhaps the way that I do now, I would have been way more clued in, and I would have maybe found Bitcoin myself. but I didn't know anything about that stuff. And so I heard his tale as like, this is just esoteric. I'm just absorbing this as like, you could be telling me about a cool math theorem, like the Banach-Tarski paradox. And it's so cool that one sphere can turn into two, but like it has no utility in the world. Like, I'm glad it exists, but it doesn't matter. And then I ignored it. I never did anything with it. I certainly didn't buy any Bitcoin in 2011 because I guess I didn't have any money. But it wouldn't have mattered because any that I would have bought, would have been an amazing decision. But I didn't do it. I completely just forgot about that conversation. Went back to my startup, and years later, 2013, I wound up selling my startup, that same one that I've been working on, and I made a little cash. And I heard about Bitcoin, and the price was in 2011 when he was telling me about it. The price was less than $1. It had almost no price to speak of, which is part of why I dismissed it. I was like, this is not a real thing. And then in 2013, it was already up to like a couple $100, and it's like, whoa, how is that possible? Like, how did that happen in the intervening 2 years? Like, I found myself, because I understood what Bitcoin was trying to do. I did not necessarily from the monetary policy, or I didn't really get it as a tool of economics, but I understood like from a technology perspective what this thing does, the problem that it solves. And I was like, there's no way that it's worth $200 a coin now because other people also find that cool and compelling. Like there's some, I'm sure, that are into Bitcoin because of how novel of a solution it is to this problem, but it's got to be doing something for people. That's the only reason it could be worth so much, right? So much being a measly $1 billion or whatever.
Relatively
right?
At the time.
At the time, right?
Yes.
Like a couple $100 of Bitcoin, that's a lot of money for just a thing that you made up that I could fork, right? Like I understood that how much social consensus was part of the value of Bitcoin even then. And it was remarkable to me that, like, who are these people that have given it this value? Who are these, now you might use the phrase hodlers of last resort, right? Or who are these people that are creating that foundation? And then I started to dig. And I was like, why? Like, okay, then you figure out that there's this whole group of people that believes, let's say Austrian economics or finite money supply or various other things. I'm like, maybe I'm a little older and I have some money now, so I'm starting to invest it. So I'm starting to get concerned with like where does money come from? How does one grow it? Like I've gotten a little bit of a win here at age like 30. How do I turn this win into a happy life at age 65? Like I'm starting to finally think about long-term growth of money, and I'm looking at, wow, inflation, that's crazy. Like all these things that, fancy guys at Goldman will try to sell me, because that's what happens if you never had this experience. If you sell a company, you will just get tons of mail from everybody trying to get to manage your money, regardless of how much or how little you have actually made. And so I would get these letters, and I'd maybe entertain some of them because they would be like, oh, I'm Goldman Sachs. Oh, you're Goldman. I should listen to Goldman. You're famous, right? And it's like, you send an extremely attractive woman who doesn't know anything about how to actually manage money, and she's very attractive, but it's not what I was looking for. It's not going to make me feel like you're doing the best job for my money long term. But during that phase of learning about how to grow money and how to invest, I just decided to buy Bitcoin. And thank God that I did, because it was a great move. I held on to it for a long time. It's obviously grown so much. But more than that, it kicked off like the real phase of my own interest, right? Like a sports team or anything else. Like once you get emotionally attached to it by buying some, I think you start to notice it everywhere. You start to want to learn about it more. You start to obsessively think about like, what is this thing that I bought a piece of? So that's how it got started. And I want to just close that little segment by requesting again, weird Portland math kilt guy, if you are out there listening, man, please get in touch. I'm Dhruv at Unchained Capital. I really want to hang out with you and talk more about what happened to you. I'm just so curious. I
want to know too. Yeah. If you're out there,
did you become a hot
Dhruv, if he reaches out to you, tell him to reach out to me, because I'd love to have him on the show with the kilt, to figure out.
Who knows how many people he radicalized back in 2011, right? Like,
I wonder if he's a Buckcoiner now. Maybe he's on our Buckcoin.
Maybe it's better that he's just a legend and I don't know anything about him.
Right? You don't want to meet this mystified legend that you've built up in your mind over the years.
Right.
So how did you get from 2013 buying to becoming the co-founder of Unchained?
So the business that I had sold in 2013, InfoChimps, was very much like a cloud computing, big data, distributed systems. So I had, with my kind of educational background, I had a good grasp for like the fundamentals around cryptography and computing. And then this company helped me learn a lot about distributed systems. I was so primed to like enter Bitcoin. I was just feeling like almost, wow, I was made to like be in this field. You know what I mean? Like I'm a nerd about all the things that you need to be good at Bitcoin and cryptocurrencies. But I was so reticent. I think I'd been through a cycle of, raising money, building up a company, going through customers, like the rich periods, the lean periods, eventually selling that company, like having a great success at it. And I saw how much of that was luck. I saw how much of that was things I couldn't control, like the market suddenly deciding in 2013 that, they desperately needed to buy companies like mine, and then my company getting bought. It was a great outcome. But 2 years earlier, it could never have happened. 2 years later, there would have been so many companies like mine that perhaps I wouldn't have stuck out as much. So timing was a huge part of it. We sort of joked at the time, Joe, my co-founder, and I, he was also my co-founder at InfoChimps. We joked like the best thing we did with that whole company is we started a Bitcoin company, we started a big data company in 2008. And it almost doesn't matter what that company does. If you can survive to 2013 and you've been this big data company and you've been creating value and you've been accruing knowledge in your team, like you just have so much value. And so we worked for our acquirer for about a year. Early 2015 now. We both quit. We're both just like out there, like, bought condos, got engaged, like living life, doing a lot of stuff we maybe could have done when we were building the first company, but we didn't. And it became like, well, what do you want to do next? Because we knew we wanted to work together again. We knew we wanted to build another company. And now we were somebodies now to a certain extent, right? That we had we've been blessed that we had a company, we sold a company, so now we can get meetings. We're data guys, right? That's what everyone thinks of us as. 'Cause we did one thing, so now we're that thing. We're data guys. So we should become data guys. Let's go start a data company. Let's look at the data around the food industry or construction or various other kinds of things. And that's what we felt we should do. But the reality was every night we would be learning about Bitcoin. We'd be like reading more about Bitcoin. Like, Ether's coming out. Like there's all this other stuff happening. And it was clear that that's where our obsession and our interest lay. And so it kind of became like, I have no discipline or willpower. So if I can be in love with what I'm working on, I'll work on it all day long and I'll do a great job. And if I'm not, I'm going to put it off. I'm going to procrastinate. And so I was in love with this. I was like, I could do this all day long. Like I feel in my bones, I could spend years learning about this field and getting good at it. I knew that. But then the question was like, is it a good call? And I think, in 2011, I would have had to be a little bit more courageous of a person to have decided to build a Bitcoin or crypto company. But by the time 2015 was happening, it felt like so much had already occurred that like there was a certain amount of de-risking. There was so much risk.
Coinbase was 3 years in. Blockchain, Bitstamp.
There were hardware wallets now. There were secondary services people were starting to build and think about. Like Bitcoin had collapsed from $1,000, but it hadn't died. Like that was amazing that it didn't die. Like. Stayed alive.
Lord Asterix was shorting all the way on the way back up to 800 from 250.
That's indeed. And it's just like, at some point we're talking, well, what is it in 2020 that is going to be big data again? Like in 2022, that companies are going to be like falling over themselves. That what's this strategy, right? And eventually we were like, it's going to be blockchain, like maybe like AI, maybe like drone, maybe some other things, I don't know, but nothing had the intersection of like the growth potential, our suspicion that a few years from now people would be like clamoring to be in it, as well as it's interesting and like we'd be good at it. And so 2015, I think we decided, Joe and I, all right, we're doing this. Like, no more data companies. Like, screw it. If the world thinks we're data guys, that's fine. We're not anything guys. We can be the kind of guys we want to be. We can be Bitcoin guys if we want to be. Let's figure out how to be that.
Why pigeonhole yourself?
Right, a little bit. Yeah, I don't like it. And then it became about what to build, right? Okay, so we've decided we're going to be Bitcoin guys, but like, what exactly are we going to build? And we didn't know initially. I think we had this thesis, like, exchanges existed, wallets existed, like, that stuff was there. We probably don't want to do that. We want to do something that's just one step away from that, right? Something that people aren't quite thinking about yet, but in retrospect would obviously have to exist in order for the ecosystem to grow. And so we identified a bunch of things like loans, lending, or actually, let's even pause. Before we got to that, because we're data guys, we looked at data. We're like, let's dump the entire blockchain. Let's look at the UTXOs. Like, how often do they move? Like, is there something in there that helps us? And those HODL waves graphs that we made and we published this year, like, we made the first version of that chart way back in 2015.
Oh, really?
And we looked at it and we're like, because I kind of knew that like people don't really spend their Bitcoin. Like, I didn't really spend mine. I maybe a couple joke transactions, like just to try it, but I had no intention of spending it because it's going to go up in value, right? It's a speculative investment after all. So when we looked at the data, and at that time, I think some 60% of all UTXOs were just like or 60% of Bitcoin by volume was older than 12 months, right? We were in the middle of the Bitcoin winter. And that was shocking because I knew it would be a lot, but I didn't expect it to be that much.
60%?
60%. I think we're down to some 40% now of Bitcoin is older than 12 months. We've had a lot of motion in the last year.
Yeah. And for you freaks out there that don't know, the way you can measure how old a UTXO is, the stat is called Bitcoin days destroyed, correct?
Mm-hmm. Yeah, that's a good summary statistic of it. I think with our HODL waves data, which you can just Google it, you'll find the Unchained Capital blog. But those graphs in particular are really nice because they give you like more fine-grained. They're the fine-grained version of days destroyed. Instead of getting one number, you'll get 10 or 15 numbers based on each age band that we chose to define.
Yeah, so let's jump into the HODL waves. Like, how would you guys like? It's an incredible phenomena to sort of observe in retrospect, because
it is cool.
You can see, I mean, we're looking at it now on my laptop, but it's crazy how like the price dictates a lot of like how strong or weak hands are at a certain point. Like everybody has a price level where it's like, all right, I'm going to cash out a little bit, and you can clearly see that with these graphs that you guys have put together.
I think there's some cyclicness there too, that like, I want to come back to like a little bit more like what's in this graph, but we made the first version of this in 2015, and it was clear at 2015 that a lot of Bitcoin isn't used for anything. It just sits around. And so that became like, oh my God, that's so tragic, because Bitcoin is this programmable, like futuristic, cool thing. Like, why is it just sitting around as though it's mattress money? And like the answer is because there's nothing to do with it. You can buy it, you can sell it, or you can HODL it. Those are your choices. And so it struck us that we should endeavor to create new choices, that we should build new options for those who have decided that they want to be in the currency for a long time, lending, vaulting, buying protection, derivatives, like there's fixed income. There's a lot of things you might want that aren't selling but are unavailable. And so like sort of 2015, we've made this data set, we've seen the truth that a lot of Bitcoin isn't spent. We started to interview customers or potential customers, like what do you want? Bitcoin, there's a lot of Bitcoin whales in Austin and in New York and in California, and we have good networks there. And so we just started asking, like, say we were going to build something, what would you want it to be? And what emerged was that loans and lending was something everybody was interested in. Like, I love the ability to get cash from my Bitcoin without having to sell my Bitcoin. Prices are super low right now, like so on. And that was actually a really nice intersection with regulations too. So it turns out regulations around the lending industry are much less than, let's say, around selling derivatives or other kinds of more complicated products. Like you don't have to deal with the SEC, you don't have to deal with the CFTC. Asset-based lending, which is the category of product we would fall under, is chiefly regulated by the states. And in many states like Texas, you can just do it. You don't need a license. There are some rules you have to follow. There's some disclaimers, but you can get started right away. In other states like California, you do need a license. There's a little bit of work. Some places are intermediary, but just the combination of the data tells us that people aren't spending it. They say they want loans, and loans are regulations-wise easier to deliver, and they're financially easy to model. It was very clear, like, let's start with loans. So we can come back to the loans, but maybe it would be a good thing to dig into the HODL wave chart a little bit, since that's ultimately what led to this kind of business hypothesis. Cool. Right. So at the end of the day, this is Dhruv. This is me being a physicist and being like, I don't understand this phenomenon. Like, I need data. I need to see things. I need to salve that visual part of my brain before I can feel I even understand what the hell is happening here.
So what did you do? Spin up your own node and pull data from that, or were you pulling from other sources?
I mean, I started by trying to just look at the price, trying to look at average volumes, but very quickly you realize that it's too slow to go through APIs, and I'm a good programmer, and I can get all the data for free by just running a node, which I was like, I kind of want to do anyway. So yeah, that's what we did. We just started running nodes, and each node, the first thing it does when it boots up is it downloads all the historical data for you. And so we did that, and then we started looking at various code bases that existed. There was a really good one that Rusty Russell put out called Bitcoin Iterate. Rusty Russell's a core dev and a Lightning developer.
Rusty Russell's got some great tutorials out there.
Yeah, dude.
Actually, my favorite one that I share often is his one on cold storage. It's a very thorough, front to back sort of explainer on different levels of cold storage. If you haven't read that yet, look it up. It's on GitHub somewhere.
No, and he's done actually so much that's cool. He wrote that article about expect them to change 21 million, which really that helped define my thinking on that issue. I think like many, I had taken that idea of 21 million Bitcoins as like a sacrosanct limit. Like, of course, that could never change.
I would argue I'm in that sacrosanct camp.
Well, I think I would like for it to be that way, but Rusty's article, the one I'm referring to, makes a really good point that, like, no, people will act to change it. Like, there will be politics around it. People will want to fork to double the limit or whatever. Like, and it gives these great reasons, like, why it will happen. And you can exactly see, like, as someone that, I mean, this article is being written in the middle of, like, the block size debate. And it's just like,
I remember this vaguely.
It's just short-term and long-term desire. That's it.
So what he says, basically, and this won't happen for what? Like 50, 100 years?
We don't saturate the actual limit until 2100 something, but we get really close within the next 5 or 10 years.
21, yeah. I mean, by 2028 or 2032, I believe.
It's almost all in our mind, yeah.
20,998,000 or something like that.
Some crazy amount. Yeah, almost all of them are mined within the first 30 years of Bitcoin's history, which is remarkable. That's a decision that Satoshi made without a lot of evidence, presumably. They just chose that they wanted it to be that way, but whatever. So Rusty's awesome. Rusty wrote a bit of code called Bitcoin Iterate, which I suspect, by reading it, it's the kind of thing that Rusty wrote. I've never met him, but I imagine he wrote it while drinking on a Saturday afternoon, and like, it represents a tiny amount of work for him, and he never really came back to it. I mean, he did. He came back to it occasionally and patched it up a little bit. Eventually, he got it to work with SegWit. Someone contributed a patch, but I think for Rusty, very much a side project. For us, it became very much a main thing that we spent a lot of time working with this tool so we could extract the data we wanted from the Bitcoin blockchain and make plots like this one, as well as others. There's better tooling out there, I think, these days now. There's a really cool project called BlockSci. A friend of mine, Arvind, in Princeton, he has a really great research group that puts out like amazing content. You should definitely have him on the show. He's a stupendous speaker and an awesome guy. He's got a new piece of code that his team has been putting out called BlockSci, SCI, which is, I think, the next evolution for if you're really trying to do data science on blockchains. You should probably use that tool. But yeah, so we started with Rusty's tool, and we just started pushing out everything we could about this. And it was very much like, I had a couple interns at this point, and I think they'll laugh that like I didn't know what I was looking for. I was just like, I said, no, I don't understand Bitcoin well enough, and I know it has tons of data that other people aren't talking about. Show me all of it. Like, show me all of these slices. I want to see it bend like this. I want to see UTXOs, and UTXOs in particular, because they're not a thing that's sitting in a block. Like, they are the result of having parsed a sequence of blocks, and then you know something about the UTXOs. Therefore, it's a little bit harder to go to like, blockchain.info and just see UTXOs at a block, right? Like, you see transactions in the block, you see all this other stuff that's written into the blockchain, but UTXOs are calculated, not written down. And so in particular, I felt that analyzing the UTXO set of Bitcoin would be like really valuable. There's stuff there that we're not talking about yet. And some of that stuff is like, the HODL waves. And I think I didn't really see this wave-like phenomenon until 2017, right? That if you think about this chart, I made it in 2015, so this entire last third is just missing the first time I looked at it. And the cyclical nature of the rallies that occur in Bitcoin was just, it was sort of implicitly there. Like, I know that Bitcoin has had rallies, but I didn't see how those rallies then manifest themselves in the underlying like holding patterns within the actual protocol. And that eventually you can see that pattern get terminated as the price rises to some critical threshold, and what might have been further hodling gets replaced with just massive selling, because people are like, gains,
right? And that's so how much from this can you glean? Like, can you tell, I mean, it's probably impossible to tell, but like how much more distributed Bitcoin is after all these HODL waves,
I think that's definitely one lesson. It's not data that's obvious in the blockchain itself, because I think Bitcoin by design does a good job to de-anonymize who's got it. It doesn't do a perfect job, as we all know, but it does an okay job. And we just know that each of these waves has been so much larger, right? Each of the cohorts that has bought in 2011 versus 2013 versus 2017, each cohort has been larger by a factor of 10 than the one before it, right? And the amount of Bitcoin, actually, I was just looking at this in detail for a separate thing, but roughly, like in rough terms, in each of those waves, it's been about 20 to 25% of the then supply that moved.
Okay.
And that's been somewhat consistent. That in 2013, about 20 to 25% of Bitcoin was quickly sold, during the big run up, right, to 1,000, and indeed to 19K in 2017. It was also coincidentally around 20 to 25% of Bitcoin at that time, which was presumably sold. Again, it's hard to know exactly what happened to it, but it was definitely moved for the first time in many years. Yeah. If you actually go look, you will see that today, I think this chart is already updated for the latest moment in time, but right now there's 20 to 25% of Bitcoin, which is sitting in the category that we define as 6 to 12 months old. And it's no surprise, because if that's all the coin that was moved around December, January, that is now then gracefully aging because people aren't moving it anymore, right? It's just sitting there. It's not continuously trading because that rally is over. And people are I don't know what's going on anymore, right? They're sitting on it. And the same pattern is it's so clear that same pattern of a new cohort of people that's vastly larger, that bought it at a vastly higher price point, has acquired this stuff. The weak hands got flushed right away as the price collapsed from 19K to whatever, 6K, right? You can see that. You can see that in the data. And then what's left is a new large group of people who are what the hell did I just buy? And they don't need to sell it. They're not necessarily eager to have gains. If they were, they would have already sold. That's already happened. So now we're left with the hodlers. It's the same pattern. I was a hodler from a generation prior. There are new ones that are being minted right now, or that were minted, I should say, this last year.
And then how many of the old hodlers do you think stick around? A good portion of them? And they're just, do you imagine they're just selling a portion of their Bitcoin at local highs?
I think there's a good amount, because a good fraction of the Bitcoin which was sold in 2017 was from 2011. Right? There is coin that was more than 5 years old that was moved for the first time ever during 2017.
It's crazy to think. It's crazy that we can track that.
It's cool.
Right?
You can't track it for anything else. There's no other asset class in the universe that has this level of detail around it.
And so that's what, do you think this is a healthy adoption pattern? A healthy cyclical pattern for distribution, for adoption?
Healthy is... I don't know. I don't know what's healthy. It's interesting. So maybe there's an analogy, right? I keep approaching this as a physicist, right? I know this is ultimately squishy human data and behavior, but there's so many of us in aggregate that we become hard somewhere, in the numbers, right? And it feels like what I see is the halvening has got to be part of this story somewhere, right? We have these rallies, and obviously price drives action, but action also drives price. The rallies are related to the halvenings in some way. What's remarkable to me, though, is that Satoshi chose this extremely discrete shelf-like structure for how to reduce the block subsidy over time. That it's 50 for a solid thousands and thousands of blocks, right? Whatever, 200,000 blocks or something crazy. And then it drops to 25 immediately. One block to the next, it drops to 25, immediately. It's half as much. And then that sticks around for thousands of blocks. And then it immediately drops to 12.5. It's not gradual. It's not that block 1 is 50 and then block 2 is 49.99999. And then we just sort of, you could have worked it out so that the integral, if you want, of all the Bitcoin produced would be roughly the same today. We'd still have roughly 17, 18 million coins today as we would, but you could have set it up to be very smooth.
Yeah.
And I've been thinking a lot recently about why wasn't that done that way? Why was it chosen to be these discrete phases that create these moments of spectacular change and profitability for the network?
Yeah, some people argue it was to reward the early adopters for the risk they took when people thought they were crazy for even thinking about Bitcoin. Are you under that?
I mean, you can argue that having it start out high and then become low is a way of rewarding it. But then why still not do it gradually, right? It could have been 50 all the way down to 25 really smoothly or something like that. Or you could have picked some at least not as sudden as a step function change, right? And for me, it almost feels it reminds me of things diffraction patterns with light, or a breaker at the beach, right? Where you have these continuous waves that are coming in, and they hit this very discrete structure, and the tip of that structure now starts emanating its own reaction patterns. It's this physical discrete thing that's messing up this continuous world, and I kind of feel there's something like that, right? Where there's this phenomenon that's happening. There's this continual growing interest, growing and waning, right, as just people's attention shifts to all sorts of stuff in the world. And then periodically there's just this hard edge. Suddenly there's half as many Bitcoins being made, and then it creates its own waves, right? It creates these reverberations throughout the entire ecosystem. And it's weird because like, it's happening, it's going to happen. Like, but from that perspective, like the wave coming in from the ocean knows the breaker on some level is there. It's just you won't see the reaction until it actually hits. And so I think similarly, like we all know that the halving is coming in 2020, but like some weird shit is going to go down as that happens, regardless of the fact that we know about it, because it just, the discreteness of that event like causes an echo somehow in like all our behavior collectively.
And there's always narratives around it too, like confusing narratives. Like in the last one was the block size wars,
thing, right?
And stuff like that. But you find like the liquidity crunch is so strong that basically creates a FOMO, which is like, all right, need to get some now.
And maybe that would never happen if it were continuous. That like maybe humans need that ice shock of like a sudden change to like fix their shit, like, oh my God, I really should buy Bitcoin.
Exactly.
I really should start mining.
Well, you know
whatever.
What? Maybe that is the catalyst, is mining in particular, where it's like, all right, we've
entered phase 2.
Exactly.
Yeah.
Where it's
soon
like,
we'll be in phase 3. It's going to get harder and harder. You're going to make less and less money. If you're thinking about quitting your job and starting, you should do it now.
So that actually sounds like a good argument. Like maybe it's lockstep like that, or how did you describe it? Step function.
Step functions, right?
Step function like that is to create mining FOMO, where it's
it's clear that Satoshi was a master of human psychology in some ways, at least, right? Like
gotta turn my machines on now while I can get 12.5 Bitcoin before it gets down to 6.25. And by doing that, you just so happen to secure the network. So thank you, miners. And
like we are seeing fees increase, which is also remarkable. Like fees are like some 10-20% of what miners are earning these days, and it used to be zero as recently as just a year or two ago.
Well, this has been like bothering me in my head now. This is why I don't think we're going to need inflation at the end of the day.
I mean, like, yeah, in theory, like the fees keep going up and we're able to, but like, so that's a continuous thing, right? Like there's no forced discrete structure or step functions in the fee market. It's just the fee market is what it is.
But there will be an equilibrium, right? At some point, like the market's going to have to find it, at least the way Bitcoin is designed now. And so the argument is, do you add overt inflation or do you keep the not overt inflation, but overt cost, which is subsidizing the network via fees, or sort of hidden costs, which is via inflation?
Yeah, I mean, the fees thing is so. I've heard the arguments in the opposite direction, that like users don't like fees. It's easier to charge for things when they're hidden. But like on some level, I like how plain this is. Like, I mean, Bitcoin is it's extremely plain.
You know what you're getting.
Yeah,
it's written in the code. You can literally track when the halvings are going to happen. Right now, it's scheduled the way the pace that blocks are being produced at the moment. I think May 25th, 2020 is the next halving. But no, that's what drew me to it. It's like, and that's what I get annoyed with all the shitcoins out there. Is like the keep it simple, stupid mindset just makes the most sense. Like people can't see the novelty in its simplicity, where it's like, you know what you're getting, and that sense of certainty and security is all you need to plan for the future. Like you have this stable, basically town center ledger that you know is not going to change or be changed, and you have that certainty, and from there you can go take risk outside of that.
And it turns out, of course, that certainty has nothing to do with code and everything to do with the humans that run that code.
Exactly.
And Bitcoin maximalists, I suppose, and Bitcoin supporters have, for better or worse, really aligned themselves with, no, we are like conservative and we are simple and we want like a really predictable like value, robustness, and anti-censorship and safety of our money supply above almost every other thing that you could think of, right? Like,
yeah.
I find myself agreeing more and more and more with that approach.
I think it's the sanest approach, because
if you consider how ambitious the problem that is trying to be solved here is, which is the wholesale replacement of all human money, it's like, don't make it more complicated than it needs to be.
Exactly. If it ain't broke, don't fix it. Like, I would argue that Bitcoin does need a few more upgrades before it's what I would consider successful when it comes to like fungibility and stuff like that. Like,
This is something I've been thinking about recently, which kind of like, it makes me a little bit sad on some level. It's, I've really enjoyed all the data science work I've been doing, and like I love making these plots. It's amazing to me that, as we've discussed, like this is the only asset class that will give you this level of transparency into how it internally operates across the entire market. It's amazing. But we also know that Bitcoin doesn't scale. Like there's no way we actually replace sound, like we become sound money with the transaction volume that we can currently support. It's completely impossible. Like the tiniest number of people in the world today know and use Bitcoin, and it's barely able to keep up with that. So we need like second layers. We need off-chain scaling. We need the Lightning Network. We need systems that we can decide to use and like put a little bit of trust in, put a little bit of centralization into, that are a little bit less quote unquote principled in that way if you want than Bitcoin, but they're going to give us and deliver so much scalability and usability that's worth it. It's a good trade-off. But one thing that I wouldn't say galls me, I expect it, and I'm eager for it to happen. I want the Lightning Network to succeed and grow, but I feel, I suppose, melancholy about the idea that one of the outcomes of that, if that's really successful, is that this, what we've been talking about, this era in which everything we do is written to the blockchain, that ends.
Yeah.
We enter this new era where like, yeah, okay, large settlement transactions wind up on the chain. If you're a big wig and you're doing a big transaction, that's on the chain. Maybe if you bought a house and you had to move 100K, that might be your one or two times in your life that you use the chain directly. But most of your things that you buy will be on the Lightning Network.
Yeah.
And that means they're not written down. They're not, well, I mean, they're sort of written down in the sense that they're logs in various private servers, but they're not on a blockchain.
People have to share it.
Yeah, they're not public. They're not waiting for Dhruv to go later on and analyze years later. And so I kind of feel like, let's get another physics guy analogy, but like, like the Big Bang starts out with this period of like history that's like, we can't see it because there's too much shit in the universe and like light couldn't like pass through it and we're blind. In a certain way, and then there's this era, like suddenly everything transitions and the universe becomes transparent, and like now we can see through it, we can see really, really far, but the further back we look, eventually we'll reach that place where light can't penetrate, and that's the beginning of the universe's history, and we're sort of blind again. And I think that I forgot what the astronomers' word for this. It's a provocative name they give to this period where suddenly the universe becomes transparent. It's like the opposite thing is happening in Bitcoin, where we're starting out because everything is written to chain. We're in this incredible era of transparency. I can go right back to the Genesis block. I can look at the timings, and this is one of my favorite articles out there. Talks about how much Bitcoin does Satoshi have, ultimately goes back to looking at the timings and the rate of mining in the first 6 months of Bitcoin based on like nonce data, which is embedded in winning blocks of the original like first 1,000 blocks in the chain. That's incredible. That's like that's like, it's like, it reminds me of physicists going back and looking at early stars to determine nucleosynthesis or something crazy, right? It's that era is ending. Like we're about to, in the next 5 years, transition into a layer 2 dominated transaction universe where not a lot of stuff is written to chain. My ability to make claims around what's happening macroscopically by just writing code and running it over one copy of the blockchain that I've got, it's not sufficient anymore.
Well, maybe that's another beautiful part of Satoshi's design. He sort of, I'll take a quote from Bitcoin Sign Guy here. He was able to hold back fire on Bitcoin by making it seem transparent and very easy to track for authorities and stuff like that, where you can sort of lull them into a false sense of security, knowing, because it's well known in BitcoinTalk.org, like him and Hal Finney were talking about second layer settlement layers, like Bitcoin banks on a second layer and stuff like that. Maybe it was necessary to lull the authorities that may have shut down Bitcoin into that false sense of security, so it can get to a point. Like I was talking about this with John Newberry last night, like it's 42 exahash a second now. It was 6 exahash a second this time last year. Literally year to date, it's gone 7x. So the network is 7x more secure and 7x that much harder to attack. And now you're seeing things like Lightning, and if Schnorr signatures and Taproot get merged in, like privacy and fungibility is going to be a thing that nobody can. And
I'm glad that you guys see that and talk about it, because I don't think enough people think of Lightning Network as a privacy gain.
Oh, it is.
I mean, it's always talked about as a scalability thing, and it is, but it's absolutely a privacy gain. Like, I wish I sometimes didn't have a company to worry about, so I could spend all my time like poking around code and analyzing things. It'd be so cool. But like, I'm really, really curious about like how topology and routing will happen in the Lightning Network, right? Because
that's like the big question, right?
It's the only question in my mind. I mean, the Lightning Network, it's two words, right? Lightning Network. The Lightning part is easy. Like it's just bidirectional payment easy. It's hard, guys, but it's the easier of the two parts. We could have done bidirectional payment channels via email years ago, right? It's like, that's not the mysterious part. Like it's well crafted, and like the code that I've read recently, like it seems to work. Like we've got a good, like I like some of the suggestions like Peter Wool and stuff been making recently to make it even stronger, but like already it works. But that's the Lightning part. The network part of the Lightning Network, that's the hard part. That's the mysterious, that's the magic part. Like how are you going to create a network that is just centralized enough to give you the throughput you want, but remains decentralized enough so it's not just everyone's routing through PayPal servers.
Yeah, and the hardest obstacle is keeping nodes running, right?
And you don't get to control how people join your network. You're not in charge of it. Like you have to create distributed incentives which cause it to balance exactly rightly across these two different ways of failing.
Well, and going back to perfect incentive systems, like you didn't stay for the BitBlock Boom conference. You went back to Austin.
I did, I had to run out.
But Nick Bhatia explaining
I saw it.
Lightning Network reference rates, like that will maybe incentivize.
I'm extremely excited about that.
People to make it so it's easy to set up nodes and stuff like that, so that people can get access to interest rates and stuff like, or gain interest on their Bitcoin.
And I think I love that idea. I've for a long time been waiting for the Lightning Network to be, quote unquote, become real, so that companies like my own can participate in that. Because I think you're right. Like as a hodler myself, like one of the things I'm looking forward to the most is when the coins I already hold can spin off some like income for me. That would be so wonderful. Like it would make a meaningful difference in my life if that were the case. And I know that there are ways to get income from Bitcoin today, or cryptocurrency more generally. One can engage in leveraged day trading. There's a variety of somewhat risky functions to this, but like there's no equivalent of, quote unquote, the risk-free rate of return, which is, I think, really what Nick is targeting when he talks about this kind of stuff. And that's such a crucial aspect of valuation, because if there's no risk-free rate of return, there's no natural null hypothesis, right, for when you consider investment decisions. Right? Like, should I invest in this thing? Well, like if I don't, I'll keep my money in the savings account. It's going to hit me 2% a year or whatever it is. Like, so I got to be like, it's sort of, you have this basis that you understand in fiat for what you have to get past. And in Bitcoin, it's zero. The answer is zero. You know almost anything, because you can't make money from Bitcoin today. Or you can't make, you can't make more Bitcoins from owning Bitcoin today.
No.
And you can with the Lightning Network. And when that becomes a thing, quote unquote, like in theory, there does arise a very natural in protocol, like in ecosystem, fairly riskless way of getting back a return. And that's important. And
it's a completely emergent rate. It's not like it's dictated to the market.
No one chooses it. That's
right.
True.
And that's the most fascinating part to me. Like, so I came from like a managed futures background. You freaks have heard this too many times. I bring this up too many times, but part of my job was following central bank announcements and how they manipulate interest rates, how to follow LIBOR rate every day and all that stuff. And it's like,
it's wild to me that the announcement that LIBOR rates were manipulated was not like a bigger deal.
Right? Well, it was a pretty big deal, like in the finance sector, but people outside people don't know what money is. Like, people don't understand what these rates do and how it affects their pension funds, how it affects everything that they're tangentially invested in. Like,
I just remember hearing those stories on like NPR, and I was still in the quote unquote the data world. I didn't really have a lot of cash, but I was like, this seems fundamentally like a bad thing, right? Like, this is like, this is discovering your election was rigged, or this is discovering that the police are corrupt, or this is like an institution that we all rely on is manipulating us. This should be like the number one story. And maybe it was a big deal in the finance world. I don't remember hearing about it a lot after that. Like, it happened.
No, Matt Taibbi probably wrote an article.
I don't even know what. Yeah, exactly. Matt Taibbi. Thank you. Like, what were the consequences? Who went to jail? What changed? I don't even know.
Because there's no accountability.
And like, yes, I'm an ignorant person, but like, I know about so many other less important things that have happened because I've been inundated with them in the news. This was a thing that happened that then disappeared, and it's just like, oh man.
No, and Lightning. That's the beauty of Lightning, is it's a completely emergent. The data is emergent from the activity on the network. It's not me and Dhruv are not going to collude to set a Lightning Network rate ever. Like, that's not possible. I don't think so.
I think there will be some aspects of that, in the sense that, like, consider you may want to pay vastly more than, quote unquote, the market rate, so that you can be guaranteed to not be tracked. in various ways, right? Would you pay more
Yes.
if you had some sort of confidence that like your legal shit that you're about to do is not going to get tracked and forwarded onto authorities? Yeah, you would pay more.
You're the only one beholden to that rate, though, when it comes to like the Fed funds rate and LIBOR.
Of course.
Everybody's
you're choosing
beholden
to do that, but
Yes.
I kind of view there as like there will emerge within the Lightning Network sub-networks of colluding operators that are trying to build criminal networks or trying to build other sort of sub-networks that like by design, like, you know, are not meant to be like part of the main part of the network. I think that's one of the cool things that like in a blockchain, by definition, you want to be part of the blockchain. Like if you're doing your own thing over here, you've forked. Like you're not actually part of the blockchain anymore. Whereas in Lightning networks or in general in layer 2 things, there's no requirement that you must be part of the main body of everyone else. In fact, there are definite advantages to running your own little side, you know, layer 2 over here that like the normals are not part of.
And you have to get like a secret invitation or something like that.
Correct, you're right. And like and that is collusion, and that is, you know, mafiosos, and like, and it'll exist, and the fact that it's possible is beautiful, and you can't prevent it anyway, so don't try. But man, it's interesting.
Right?
Yeah.
How much is this going to change our world? This is where we get Cosmo. Like,
Let's drink some more. I don't know, man. It feels it's something I honestly, it's on a personal philosophical level, struggle with greatly. Like, what are the odds that old Dhruv stumbled into some good shit like this? You know what I mean? Like, most of the stuff I've done has been pretty damn mediocre. I mean, I have a great life. Don't get me wrong; it's amazing. But like, that I would happen to pick like the world's sound money and it would grow, and then like the company I start grows. It's such a fantastically awesome story that I almost don't want to believe it. Yet every year it seems to be coming true more and more that indeed this random thing that I got into years ago has grown yet again, and like even more people are into it, and it's even bigger, and I seem to have made the right call, and it's extremely difficult for me to fall into that and just believe it all the way and be like, oh yeah, this is good. Like, I don't need to worry about anything. In 20 years, I'll be retired off my Bitcoins and whatever else. Like, it could be true. It could happen.
it sounds too good to be true, though, right?
I don't want to believe it.
Right.
I can't. It's absurd that could be true. Yet here we are.
Yet here we are. Yeah. And I think it's so fascinating because of the gravity of money as a concept in particular. Like, the whole thought that, oh my God, we may be reinventing money for one of the few times that money's ever been reinvented throughout human history. It's like, to be born at that inflection point, it's like, what? But,
and have bought it right at the beginning, right? Like, it's
still the beginning, like, right? We're not even a decade in, right?
Yeah, indeed.
And this is something I say, like, we are the first arbiters of this network that I would hope, envision being around for centuries to millennia, right? And
you know, and I saw a good tweet today that I forgot. I'm totally going to reference it without crediting it because I forgot who said it. But it was like, you need those Bitcoin maximalists out there because they're what prevent the criticism that everyone would have leveled against cryptocurrencies of like, this shit is fake, you can just make more. They're the ones that prevent that from happening.
Right.
Because, yeah, it's true, you can go make more.
Well, that's
but
what...
if you have a group of people that's obsessively, rapidly about, like, I don't care if you make more, these are the ones that I want. Like, and it is sort of arbitrary, and it is sort of irrational, but we have to break the symmetry somehow, and I've chosen to break it like this, and follow me. That's you need someone like that, right? Like that first follower and that most dedicated follower is, I think, too often underemphasized as what causes power to really coalesce.
Yeah, the Philly Fed, the Federal Reserve Office in Philadelphia, put out a paper on Bitcoin this week. Shout out Paul Hobson for sending that to me. And I read through it, and that was basically their article, is that Bitcoin and cryptocurrencies in general never become valuable because you can fork them, and you basically, they said you have hyperinflation of cryptocurrencies in general. But that's what they don't see, is the network effect around Bitcoin is so it goes so much beyond code and development. It's psychological. It's
political technology.
Yeah, exactly. Like, nobody's making a podcast about Dogecoin talking about it like that. Like,
those Doge meetups. Secretly, though, I feel like the best people are at those Doge meetups, man.
They're tripping at
they're like hiding there, and like you can discover them there.
But this is actually, I'm happy you brought that, not Doge up, but this conversation, this line of thinking, because you tweeted out the other day about a book, The Once and the Future King.
One of my favorites, yeah.
And you were analogizing that to Bitcoin, and maybe Bitcoin has solved the problem that was in that book.
Yeah, that's like a big Dhruv personality book. Is like, like I want to believe I'm a good man. I want to believe that like with charged with a lot of power, I would do good in the world. You know, like I could be like a philosopher king. Like if I were to be picked, I would be moral and just. And I believe all those things about myself, and I always have. Always had a high opinion of myself, I guess. But growing up I guess in high school is when you first start to learn about this kind of stuff, right? Or like that they're like, what is the nature of government? What is good government? Like, what could it be? And I will admit that for a while there, I was very much enamored of this philosopher king idea. That like, oh, you know what the problem is with politics, man? Let's clap. 16-year-old rich kid in Long Island saying these things while he drives the car his parents bought him to go to the diner. You know what the problem is, man? Is that the wrong people are in charge. Man, if I were the one in charge, it would be so much better. And then reading that book was like a big eye-opener to me, because it doesn't matter that you're a good man. It's irrelevant.
Yeah,
but the fact that you centralize power creates a target. It creates an entity to be disrupted. Like enemies have a thing to lock their tenterhooks into, to disrupt and break. And that's why the Once and Future King is a tragedy. This person that was Arthur, I skipped over the entire plot.
Yeah, I was going to say, let's summarize the book.
It doesn't matter. Like Merlin, who's awesome because he lives backwards through time. So he's like Benjamin Button. He's Benjamin Button or whatever. Is like, he tries to make a philosopher king, right? He's read all the philosophy. He's from the future. He knows about nuclear war and Hitler and all these horrible things. And he decides he's going to make, I don't know, like Leibniz or like something, right? Like this Voltairean, like, or Panglossian, that's really the best word. This Panglossian character of like a philosopher king that's just from youth inculcated with the right beliefs, the right way of thinking, like to be fair, to be just. And the kingdom that Arthur, this young man, creates when he grows up, and he unites the round and this whole thing, and it's very fair, it's very just, and then what happens? It crumbles, right? It crumbles due to internal conflict. Arthur is set up. He's emotionally manipulated by people who are less principled than he, people who are willing to grasp power if it means behaving poorly. They don't care. And because they know he's manipulable, because they know he's honest, they know that he cares, it gives them a surface area. It gives them an attack surface.
That's what I was going to say.
Right, yeah. To take him out. And reading this book, it left me so depressed, because it was just like, so even if you were just the best dude and you given the power and you meant so well, like everything can just turn to shit around you. And I think by this point, I'd also become old enough to like had experiences where like things I worked really hard at that I cared about deeply that I thought were good broke because of indifference or apathy or jealousy or things that other people, and I'm talking about dumb things that kids care about, bands and clubs and friendships and things like this. So I think the whole experience left me feeling pretty cynical that don't build things. Humans are dumb, just hang out with your friends and don't let things get too big, because once they get too big, they'll get infiltrated by jerks, and just, stay small and stay private and stay friendly, right? Like that was give up, i.e. give up. Like don't go to politics, for God's sakes. Don't try to be a leader. Don't try to change the world, because you'll expose yourself as one man, and the more successful you are, the harder you will fall, almost, right? That's a depressing attitude, and it's a great attitude for a person who wants to ignore the problems of the world and just focus on themselves, which is what I did for most of my 20s. So it worked out for me. It was great. It was a great outcome. But what I've loved about Bitcoin is in thinking about that problem of how does one change the world for the better without propping up one person as a leader or like one viewpoint as the correct one to follow, and then exposing yourselves and creating that attack surface. Just don't have leaders. Like encode protocols, encode beliefs, encode movements that no one is in charge of. Historically, there have been so few of those, like.
And can you expand on the few that have been around?
I don't know that I could even name one.
No.
Like I think about like some of the more successful movements for justice that have happened in history, and there's always charismatic leaders. And I even think about like Gandhi, which was always tried out in my family as an example of someone like, oh, he's a real good guy, great Indian guy. Why'd Ben Kingsley have to play him in that movie? But Gandhi's controversial. Gandhi did a lot of great things, but he's also controversial. Like there's a lot of ways to attack Gandhi. There's an entire group of people who like hate him, who are Indian, who are like, oh, he screwed us over in all these various ways. There's conflict. There's always that like putting someone on a pedestal and then bringing them back down again. There's this conflict about them as a person, which is sort of irrelevant, really, at the end of the day, to what they were trying to accomplish. It doesn't matter what Gandhi's sexual habits were if Gandhi was trying to do this. The same thing with MLK. It doesn't matter that MLK cheated on his wife. Like, listen to his words. Like, it almost doesn't, right? But it does, because he's a human, and it'll affect your opinion of him. And every politician today that's running, it always matters what weird shit they did in college, right? Because
the Zero Hedge posted this stat the other day, like last year, and I'm not trying to shit on the mainstream media, but I'm going to do it tangentially. Last year, MSNBC talked about, what's her name? Stormy Daniels.
Right.
444 times. Didn't talk about, like, what's going on in Yemen once.
Right, I saw that, yeah.
So, like, people are enamored. Like, they're trying to take down this one guy using these flaws. And I'm not trying to say that Trump's an upstanding citizen, right?
Right,
but, like, this is, people get attacked this way. And, like, maybe Kanye said it best. No one man should have all that power, because maybe, it's a trope throughout all the superhero books and comic books and stories and legends of past, like Batman in particular, like you die a legend or live long enough to see yourself become the villain.
Exactly. And I think one of the ways out of that is to never have that one person or entity. And that's like, I can't think of things that really worked that way. I'm not a big student of history by any means, but it feels like, just by the nature of the way humans work, like, we need leaders, we need, like, direction, we need hierarchy, we need communication. Like, things like blockchains are so radical because they deny a lot of that. Like, Satoshi left.
Right.
Like, whoever they were, they left.
And just straight up left.
Just
like, didn't give people a warning. He said, I'm working on other things. And then
I'm working on what other things? What else you got going on? What's bigger than this for you? You know, it's like, I'm getting into gardening. Like, that's not good enough, Satoshi. Come on. But it is remarkable. Like, whoever they were, they created this thing that no one is in charge of anymore. Like, people have tried to become in charge of it, and they've been unable to. And yet it's growing, and it has a certain set of rules, and those rules are verifiable, and we can assert and verify that we're all playing by the rules. And
we all hold each other in check.
A little bit we do, because the power has been split up really remarkably cleverly between miners and users and developers, and we've literally fought. We've had the fights, and no one's won yet. Like, except for arguably users, which is like that's a good team to win.
That's who you want to win.
That's who you want to win at the end of the day. You don't want developers or miners to be in charge.
Yeah, so, I think if Segwit 2X was successful last year, I think I would have left Bitcoin. I
feel bad that I didn't do more. I just sat there reading on Twitter, like, I hope this shit does not go down. Like, I don't know what to do. Like, that was a weird year for me, because, like, I mean, whatever. I bought some ETH, I bought a few other weird things, but, like, I was like, Bitcoin's the thing I actually care about. Like, I feel like all these other things are opportunities for me to make money. At this point, I've, like, emotionally invested myself in Bitcoin. I really want this project to succeed. Not even just Bitcoin. I want a proof of work based, finite money supply coin with conservative development culture that's not Turing complete. That's what I want to succeed. And so that is Bitcoin right now. So therefore I want Bitcoin to succeed. I hate getting labeled with, like, maximalist and, like, whatever else. Like, I'm not at anything maximalist, but those four things. I want those four things. And right now Bitcoin is that. So I agree with you. It's remarkable to me that, like, in contrast to the once and future king, like, maybe like, and I love the title of that book too, right? Because it's the once King Arthur was once the king. His whole thing collapsed because, even though he was a good man, he was one man, and he built Camelot around him. And by taking him out, you took out Camelot. But he's the future king too, right? And at the time, I was like, well, one day someone will figure out how to really put a really good person in charge of the world, and, like, everything will be fine. And that's naive thinking. That's hierarchical thinking. That's authoritarian thinking. And now I'm just like, well, the future version of that was, we deny the kinghood, right? We deny that the idea of there being a king. And that's been so difficult. Look, every ICO suffers fundamentally from this problem. Every altcoin ICO has a king. It has someone that fundamentally has benefited from launching the project and is a significant holder of the resources of the project and wields significant influence. And they're building Camelot around them. And I've already read the book. I know what happens. It's tragedy, right? Some dumb shit Vitalik will cause Ethereum to fail. Like,
right.
I have so much respect for Vitalik too, but, like, I see it. I see, like, you're so closely coupled. Like, every time there's a Vitalik death scare,
this time last year, I think
drops like a few percentage. Like, that shouldn't be happening. There's no person in Bitcoin whose death means anything. At this point.
And
excuse me.
That's why, like, I don't think there is a true competitor to Bitcoin. I think the Immaculate Conception and Satoshi leaving,
extremely hard to replicate.
Right?
Yeah, extremely hard to replicate.
I think it might be impossible. Like that's what I think we're going to come to find as the first generation arbiters of these blockchains, of this blockchain in particular, is that like people are going to try and replicate it. It's just going to be impossible. Like you cannot.
This is a struggle with this too, like because there's a little bit this concept of but why did it go that way, right? Like if it was arbitrary, but why? Like you always want there to be a why, especially as scientists, we always want there to be like a deep why that couldn't have been any other way but this way.
Yeah.
But one of the things I think we're coming to accept, even as scientists, is that the world has hysteresis. It has path dependence. It has, well, it could have been other ways, but that it became this way, now it is this way. We are stuck with this way basically forever. And this applies in things like evolution, like, you know, why are we fundamentally two-limbed and not, I don't know, four-limbed, like the avatar creatures or whatever? Or why is our cellular metabolism use these chirality molecules as compared to literally the identical molecules just shaped the other way? Like, well, it's just hysteresis. It's how we are. Why do we pick Bitcoin and not Litecoin? Because it would have worked just as well, frankly. I really feel.
Right.
Well, because it came later and we'd already picked this and the symmetry was already broken and... not everything needs an explanation, I guess, except for the fact that it happened to be there and it happened to be first and it didn't cannibalize itself, which truthfully has been my big, like, for all my bullishness around Bitcoin, why didn't I take all my dollars and turn them into Bitcoins way, way long ago? Because I should have, because it would have been a great decision, but I didn't. I was just a pussy, but a big part of it is also because you don't know, like, you don't know that the symmetry's really been broken. Like, is Bitcoin Friendster or is it Facebook, right? Like whatever, right. You don't really know. But kind of like the Lindy effect, right? The longer it goes on being the thing, like the more you sort of have to admit to yourself that like, this is probably going to be it. Like it's imperfect, but it doesn't matter. It's too big already. No one's in charge. And that immaculate conception is so hard to re-engineer.
Probably impossible.
Do you think they will talk of Satoshi the way they, like, let's say King George once talked of George Washington? Like, I think the greatest ruler on earth because he abdicated power. I think they'll talk about
Satoshi like Jesus. I swear to God.
The religion.
Like
the gospel of Satoshi.
The Genesis block. Like,
dude, it's so
the fact
fun.
that he like put a message in it, disappeared, like Immaculate Conception. Like it has so many religious undertones that like,
I found some good like weird internet copy pasta about how Satoshi is like a time traveler.
Right?
And like eventually
trying to slow down quantum
pop
computing.
out in the future the day we mine the 21 millionth Bitcoin and like I don't know, he'll be like a multi-trillionaire, and I don't know, and then he'll become a philosopher king, of course, right, and change the world for the better.
Well, the other Satoshi as a future time traveler theory is that he's trying to slow down the propagation of quantum computing by making it so everybody's forced to buy GPUs and use that on Bitcoin mining instead of.
What a remarkably good science fiction story that would turn into, right? Wow, I need to create an economic incentive to prevent this technology from showing up. That's good stuff.
No, but it's crazy to see how far it's gotten and where we are now. So like where we are, like we're in a new bear market, probably fourth or fifth, like parabolic move, and then down we're at a trough. But you're seeing it time and time again, like a lot of people like the pre-mine altcoins that were in 2013, 2014, I would argue are the ICOs of today.
Right.
And back then and now today, you're seeing like people coming to the light, if you will. Like, all right, maybe Bitcoin is the only one. So that Lindy effect gets stronger, and then the network effect around it and the hodler base gets stronger as well. And it seems, I don't want to say inevitable, but I think 2 to 3 more of these cycles as hash rate rises and you get more believers, I think it might be inevitable within like the next.
So at the same time, like we're entering, I think, new regimes of what we compete against as Bitcoiners. Like I think during the first few years, let's say 2009 to 2011, 2013 almost, your only competition is ignorance. Like you have to explain what even is this thing, like why would you want it, like etc. But at some point it turns into you compete within your category. So it's like altcoins are a thing now, Ethereum and then ICOs are a thing, and then there's like, Ethereum's going to flip Bitcoin, and like that becomes the discussion, right? Like what Bitcoin is competing against is other cryptocurrencies. But I feel like that phase, to your point, eventually ends. And then what happens next? It's not a smooth run all the way to the summit for Bitcoin at that point. It is a grinding battle against everything else that is out there. I feel, honestly, Bitcoin's about almost 10 years old. God, there's going to be so many puff pieces that come out next year about Bitcoin being 10 years old. I just realized that. I'm not going to read any of them. But Bitcoin's about to be 10 years old. This first 10 years has been like JV sports, you know, or like featherweight boxing. It's like, who are you really fighting against? Like, what powerful person's power are you diminishing Bitcoin so far? No one.
It's the nerds fighting against each other.
It's meaningless, right? Yeah. It's $100 billion, $200 billion market cap. It's tiny compared to the things in the world. But like, say we stop fighting with other cryptocurrencies and Bitcoin becomes the cryptocurrency that matters. It's going after sound money. It's trying to become a global reserve. Over the next 10 years, like, the fights are way more real.
Yeah.
We would be displacing individuals and entities and groups that have real power.
Yeah.
And the ability to defend that power. And I don't view that as meme-based warfare really anymore. Like, that starts to get pretty real.
It starts to get physical. And talked about this with John last night, but we saw, I believe last month, I think it's 4 to 6 weeks ago, a natural disaster take out a mining farm in China and materially affect hash rate. Like, imagine if nation states started showing up and unplugging or, God forbid, bombing mining facilities. Like,
one of the cool things I heard about from a friend of mine, Brian from Factum in Austin, we were talking a little bit about this, and he was talking about how, you know, attacking another nation's hash power is a totally reasonable thing to do in a time of war. That, like, it's privateers taking out merchant marines, like, on the open seas. It's the same thing.
Oh my God.
You're attacking their means of production.
Yeah.
Right. And I've sort of started to get to the point now where I believe that the whole proof of work is wasteful thing I think it's foolish. Like, I think, yes, proof of work is using energy. It's not wasting energy. It's using it. There's a certain optimal ratio of the world's energy we would use to secure the money supply. And I think it's a relatively large ratio. Today we spend 0.001, like, so 0.1% of the world's energy on securing the money supply, securing a subset of the population's money supply via proof of work. I feel like the real number there is like 1 to 10%.
Yeah.
So, like, there's a room for a 10 to 100 to 1,000x growth in Bitcoin before it tops out. Like, obviously Bitcoin can never use, or proof of work can never use 100% of Earth's energy. That's foolish. We've got to build and we got to do stuff.
Dhruv,
yeah,
you have it in your bio that you want to go to space. Have you ever heard of Dyson spheres? All right, we might move to Dyson spheres.
We may. And I gave a talk on this where I was like, if you think Bitcoin's energy usage today is bad, just wait until humans have spread through our local neighborhood of the galaxy and we are straight up using 30% of a sun to hash. Because why not? It's not like energy is really a thing to be reserved. It's not. It's almost infinite. It's out there everywhere. The shitty part is
just
dirty
getting
energy.
there.
Dirty energy sucks. And right now, all we have is dirty energy. Well, so when we burn it, yeah, it's bad. I get it. It's bad,
but then Bitcoin's incentivizing people to find cleaner energies. And that's what people don't realize. Like,
it's incentivizing people to find cheaper and more efficient energy.
And what they're finding is some of the cleanest energy is also the cheapest.
Yeah, which is partly political, and that's fair. Like, we should reward and make cheaper energy, which is more sustainable. Like, totally makes sense to me. But at the same time, this is incredibly healthy to me. Like, I view this as... This is such a smart move that humans have collectively made. Is we know we've always been fundamentally limited by energy. Like, energy is the currency of the universe, and we're just coupling our actual currency to that very directly. And it's so smart. Like, it prevents our ability to think our way out of the physical constraints that we're actually always under. We're always under those constraints.
And this might be like a dumb correlation to it, but like, I honestly think, not dumb correlation, but like rationalization. Like, I think you need the proof of work. Like, Bitcoin is worth something because people had to work for it. Like, people had to expend energy. Like,
and energy is the only thing that we can turn into digital representations without loss.
Right?
There's no other thing like that that we know of, and the only reason we know how to do that is because of proof of work.
And it's just a matter of time before people recognize that novelty. Like, the percentage of people that recognize that novelty is so minuscule right now. That's why I think if you have any amount of Bitcoin, you are above and beyond, and you hold it for the next 10 to 20 years, you're going to be well off to an extent, or better off, I should say, better off than most.
If you can HODL it.
If you can HODL it. Yeah. It's a mental battle.
It is.
It is.
I don't know how you do yours, but I do mine. It helps that I don't have, at the end of the day, that much Bitcoin. I have way more than I ever thought I would have. But when I bought my Bitcoin to begin with, I said, this money is gone. If you lose it, it's okay. You don't have to feel bad about it. Don't beat yourself up that you lost this cash. But the flip side is, if it grows, you don't have it. Pretend it's not there. Yeah. And it's been a great way to just be calm, like, because Bitcoin's fucking volatile. It hurts to feel like I just lost $100,000 today. That's a painful feeling to feel. But if you're like, well, I never really had that money in the first place because I was never going to spend it because it's not really real, because like I told myself, like, this is a 15-year experiment and I'm just going to run it, and I've got other things going on day to day. Like, it's such a healthier for your psychology way to feel. Like, that's also my personality though. I'm not an active trader. I'm not like a buy in and out of positions kind of guy.
I'm not
like,
that way either.
And I like, you know,
and that's like, I was lucky to get, I'm not going to disclose that, but to a point where you get to a point where it's like, all right, like that same mentality. Like, I got my quote unquote war chest. Like, if I can hold on to it, all the better off. But truly, honestly, like, do not invest more than you can afford to lose. Like, I
think it would make you crazy. Yeah.
Like it would. Like, I sleep fine at night.
Yeah. Like, my girlfriend and I have talked about it. We're like, well, what if you took all that money you made when you sold your company and you bought Bitcoin with all of it? I would have been like, that would have been so cool. Right? Like, I for sure would have freaked out at some point. Because it would have been like, oh, it keeps going down. All my money's going to be gone. You fool. You had one win. You burned your whole win on these stupid magic beans from the internet. Like, what's wrong with you? Like, I don't know that I'm confident enough to have withstood all that internal self-berating for all those years.
And it's not healthy.
It's not, yeah.
And again, this is like the theme of this podcast. Like, if you do treat it as like an investment, or you dollar cost average in, where you're like, hey, every paycheck I'm going to throw $50. Like, if it becomes what we think it will become, like, you will be better off, even if you're just throwing that little amount of money in. And you'll be able to sleep fine. It's like, skip a night of drinking and buy some Bitcoin with what you would have spent on the bourbon.
Yeah.
But that's another thing I like to talk about, is like, Bitcoin is changing us more than we're going to change it. Like, it's changing our tendencies.
I mean, Saif talks about that a lot, right, in his book. Or I haven't read it yet. I'm actually about to go on a beach vacation. I've got it with me. I'm going to like totally just like advertise.
It's an easy
Cabana, got the Bitcoin book. Like, who's this guy?
You're gonna get a lot of likes on that.
I think so. But like, but exactly that is. I think that is what it does. Like, it forces us to consider the things we buy a little bit more carefully, because we'd be giving up our Bitcoin position. It's like that Warren Buffett line about like, how do you live in the same shitty house that you've lived in for 40 years and have the same old car? And he's like, well, you know, a new car would cost me $20,000, but really, if you think about the net present value of that money, like 30 years from now, that's a $1 million car. I'm not in a position to buy $1 million car today. Right. And you're like, that's a weird way to think about buying things. Like, you're not thinking about consumption the way that I think about consumption. But you're also, that's how you became so wealthy. And that's the reason I can never keep money I have, is because like, I will always buy things with it because I'm a consumer.
And
yet I've avoided that with my Bitcoin. I don't sell my Bitcoins.
I don't either. And I think
I buy a lot of dumb shit, but I don't sell my Bitcoins for it.
No. And you also, it helps you find like, pleasure in the simple things, you know, like just going to the beach and hanging out, like not having like, I don't go to the clubs. I don't go out that hard on the weekends. Like, I'm in my mid-20s. I could
Bitcoin is good for old guys. Yeah, it's good.
Right?
It's good.
I'm not old, Dhruv. All right, I'm still in my mid-20s, but I do find myself like not going as hard as some people my age, you know, and just like, it's not worth it to me. I'd rather read and maybe buy more Bitcoin, you know. Actually, that was pretentious. I don't read. I'd probably stay and smoke pot and watch Netflix.
And watch Netflix. And buy a little Bitcoin. By the way, this is something like a secret thing that I've been working on with my girlfriend. She's a writer, and I've got her convinced. Like, we talked about brainwashing people that we love into loving Bitcoin as well. So I don't know that I've brainwashed her. She's very stubborn. It's very hard to brainwash. Very smart.
That's good.
But I've tried, and I recently got her to want to write about Bitcoin, like, and try to make. I think what would help Bitcoin a lot is an incredibly good television show like they're so, you've interviewed some of them. There's so many good characters in our crazy world. Like John McAfee, come on, dude. What? Like he's a character from Silicon Valley. Like it's amazing. There's so many more, and the story of what is happening here is so compelling. And it's the kind of thing that I think if you gave normals a window into it, you'd help them appreciate what's happening. You'd help them appreciate, the asset class itself. There's like a smart way to do it. And I kind of feel like that's one of the things that Bitcoin people are the worst at, is because so many of us are nerds, like self-satisfied, wealthy, otherwise successful, dismissive of wanting to go out there and plead your case, because we're the kind of folks that think a lot of times that feel, look, the evidence should speak for itself. Like,
it's like Satoshi's quote, like, if you don't understand it, I don't have time to help you catch up.
A little bit, yeah. But I wonder, on some level, we were like, maybe what we've unleashed is such a behemoth, and it's so inevitable that it doesn't matter. We can be arrogant and not explain ourselves, and it'll just happen anyway. But I doubt it.
I don't. That's like, so I take the opposite. Like, so that's why I do the newsletter. That's why I do this podcast. Like, to extend the olive branch. Be like, all right, like, more people want to learn about this. Let's break it down. Like, this is important. You should be thinking about this. And
those are vital functions. I mean, I feel like my own business in allowing Bitcoin and Ethereum and other cryptocurrency holders to get liquidity without having to sell their tokens. It allows me to preserve hodlers. Like, if you were in danger of losing your position because you had a life expense, like, I can help you. That feels holy on some level. Like, I've seen what our customers are doing, and I've seen that I've helped people like preserve their Bitcoin wealth, and that's awesome.
Let's go into the mechanics of Unchained. Like, so how does this work?
The loans. Yeah. Well, okay, right. So going back to what we're saying, like, one thing I've heard over and over again is, I had all this Bitcoin, but then I sold it for this. I sold it for that. Because life gets in the way, man. Like, I feel it as well. Like, whenever my Bitcoin pumps in value, I suddenly look at how much worth. I'm like, oh man, I could buy that with this. If I were to cash out right now, like, I would have that thing that I've been wanting, right? And I love how Saif talks about long time preference and all these things, because like, I've learned to not have that conversation with myself. That thing that I want doesn't matter. Like, I don't need that thing. And so it's been, or I can sell stock to buy that thing. That's a better way to buy that thing. So like, I get that, but it feels like too many people like don't have the luxury of having wealth outside of their Bitcoin. They're pressed for it. Like, they really need to do this. And so they do. And so they sell it, and then the price goes up by 10x, and what might have been a life-changing amount of wealth for them is now this regret that they hold on to. And it can turn a man bitter. And in general, one of the best parts of wealth is the ability to preserve wealth and to create it again. And one of the core aspects of that is leverage. And so at the end of the day, like, I've really enjoyed being able to offer Bitcoin holders like some degree of self-management, some degree of degrees of freedom around how they choose to manage their funds. It's not just buy and sell and hold anymore. Like, you can borrow. And there's firms like mine. There are other competitors. There are other behaviors. You can buy derivatives contracts now that help you. The ecosystem is so much richer in 2018 than it was in 2013 or 2011. And so I'm really happy to be part of this. It feels like something like this had to happen, that I'm doing it. It makes me happy because I see that I'm fixing problems for people. There's so many companies in our space right now that don't actually do anything. They don't really have a product. They're not solving a pain. They may have a product, but they're not solving a pain point. Their customers are speculative investors at best, not really customers who are paying to alleviate pain. Whereas I feel like the niche of, I've got Bitcoin, I have expenses, I would like to pay for the expenses without selling the Bitcoin. That's such a pain point that's clear that our business does very well. And so our customers are really happy. We're solving a real problem for them. And as we were talking about in terms of endurance and surviving, this is the business that survives, it feels to me, because our customers love us and we have real revenues, and I don't need the price to be up in order to be doing well. I just need my customers to keep borrowing and keep paying their interest payments, and they're doing it.
Yeah.
So how does it work with Unchained? I've really tried to build the kind of product that I would use, right? Like, if you need liquidity, you come to us, we talk to you, we have human beings. Like, you can call our phone number, we'll chat, like, we'll make you feel comfortable. We do all the normal things around KYC, AML. We've got to get your social. We've got to get your identity. Having collected that, we'll give you some terms. You deposit your tokens, and it can be Ethereum or Bitcoin. Those are the two currencies we work with. You put them into a dedicated address. Those addresses are on the blockchain. We don't like commingle things. It's not like Coinbase or an exchange where you're just shooting it into like some account and you don't know what happens. Like you see it, it's on the blockchain. You get a dedicated address for your Bitcoin, for your loan. You can look at it. You can put a watch on it using any block explorer tool you care to use. And it sits there and it's collateral. And the really remarkable thing that we do that's new in the financial world is we just say, hey, Bitcoin is good collateral. Like, it's kind of obvious to me. Like, it is worth something.
Right.
You can clear it really quickly. You can program in your rights to access it. It's digital. You don't have to worry about the weather. It's not like a home equity line of credit. Like, it's so perfect as a form of collateral, yet so few people
understand it. Like, I had this issue when I signed the lease for my latest apartment. Like, I wanted to use my Bitcoin as collateral, and they, like, completely couldn't understand the concept. And I was just like, it's there. It's liquid within 20 minutes. Like if I just move it from my wallet to an exchange, like it is liquid.
And so if there were anything, like our business is on some level like it's like the oldest business in the world. It's money lending, right?
Right.
Like, and it's so well regulated and it's so simple. But at the end of the day, the radical thing that we do is we say, let's just believe in Bitcoin. Let's just say that it's a real thing and treat it like real wealth. And that opens so many doors because that's the first step. Like we're not called Unchained Lending, we're called Unchained Capital. Lending for us is a first product category. We're doing really well. We've given more than $10 million in loans. We have more than 50 customers. We're solving problems for people in a variety of states and increasingly internationally. Like it's growing. It's really great. It's a good product. But beyond that, there's so much more that we've realized through this product that people need. They need fixed income. Like they need a way to earn a return from holding their crypto assets. They need protection. They need recovery things. Like when you die, like how do you get your Bitcoin to your mom, to your daughter, to your wife, to your loved ones, right? Like how do you protect yourself against illegal seizure? It feels like custody and liquidity and protection and advice, these are all things that are connected. And that makes sense because if you think about being a quote unquote normal rich person, you have
family office.
You have family offices, you have high net worth, like sort of, you have private wealth management, you have these sorts of functions which are designed for, look, I know that like there's checking accounts and like there's the normal mass of people in the world who like are living paycheck to paycheck, but then there's this special group of people who, for God bless them, are incredibly wealthy and they have unique circumstances. And so truthfully, I wish that my company were like on some level totally democratic and working with every single possible crypto user in the world, but it's too early. That's not where we're at. We are working with those people who have a large amount of Bitcoin or Ether, who have a strong pain point around not being able to be lent to against it. Like you mentioned, I would have loved to buy a house using my Bitcoin as collateral. Very few people are frankly in the position to buy a house using Bitcoin as collateral, right? Like you're lucky for being in that group. But now that you're in that group, you probably recognize I don't have a lot of options. This is screwed up. Like if I was sitting on the equivalent amount of Apple stock, like I would have no shortage of people who are willing to like extend me leverage or loans or liquidity based on this wealth that I hold. But suddenly it's Bitcoin and it's like it doesn't even exist, right? Like, or it's almost worse, right? It's like you just said Bitcoin, I have to mark this down now. Like,
it's so true.
You know what I mean? It's like almost literally like worse than not having any Bitcoin. And so for all those reasons, I've really liked starting a business like this because we're solving real problems for people. We give loans very quickly. Like in particular, what I'm really excited about is our custodial solution. So I think a lot of the lending space, I mean, it's one that we've been targeting for a long time. We've been giving loans since June 2016, which makes us, I think, one of the earliest crypto lenders in existence, which is awesome. But a lot of the folks we compete against, a lot of the other crypto lenders that are out there, they really approach lending like it's their only reason to exist, that they don't think about custody, they don't worry about the other kinds of products you're going to need, they don't recognize that as a high net worth crypto holder you have all these other needs. They treat you a little bit like an anonymous just source of Bitcoin. Like you just show up, it's online, we'll get it done in 2 minutes, throw us the coins, we're going to throw them in a single sig, you have no idea where these coins are actually living anymore, and you will get some money and it'll all work out. And I think that's I appreciate that. I get that. I get why that's a good idea. If you want to have millions of customers who are shooting you crypto to give you loans, that's a great way to build a business. But it's not what we do. Like we're very automated, but we're very human driven at the end of the day. That we really need humans to make decisions. We don't like automating there's no way in our platform for Bitcoin to automatically move from anywhere because it's not possible. It's all on hardware wallets. Human beings have to get together. They have to reason with each other. They have to agree that really, yes, we should move these coins. Everything is sharded and isolated by customer, by loan. We've really tried to make it as safe as possible for people who have like a lot of Bitcoin, who care about this level of custody.
It's great to see, like what we touched on earlier, like why pigeonhole yourself into one function? Like this is the Wild West. There's so many facets through which you can engage customers. If you have a full suite of product offerings, like it's so raw right now.
It's something that I thought about when we first started building the company, and we were like, look, our mission is we want to create liquidity. We don't want to become a wallet. We don't want to have to do custody. And what I realized was I just couldn't offer this product and feel good about myself. Because what were my options? I'll take your Bitcoin, I'll throw it on Coinbase. I don't feel good about that, nor should you. No. Like, should I use BitGo? So like they'll have hotkeys and I'll have hotkeys, and everything boils down to API access and how well I guarded like the control of my API tokens. Like that doesn't feel good to me either. I want human beings. I want like to be robbed. Real humans have to be like in the mix. Like there's no algorithm, there's no bit of code that can be injected somewhere into the infrastructure and suddenly Bitcoins are gone. Like look, the Bitfinex hack for me was such a lesson. Right. Like these motherfuckers
116,000
over the course of hours. It took hours. Someone targeted a weekend when they were at like some corporate event, so like they wouldn't be responsible. But like
somebody got their YubiKey or something, right?
Dude, so many things. If you think about that, so many things had to fail. Like you were alerting that you're being robbed, had to be ignored or not exist. Someone had to get in and compromise your access to BitGo. Like you had to have nothing in place to prevent repeatedly requests to just move your entire portfolio out of like. That's an insane way to build a system for long-term protection. And I get it if you're an exchange and you have these needs to be able to quickly move capital in minutes or seconds. Like I get it. You need to be hot. My business doesn't need to be hot. I have no desire to be hot. You don't need to move in minutes in my business. You want safety. And what I looked at, I was looking for, is there a BitGo that's cold? Can I build cold wallet based, like hardware wallet backed, like multiple person, like super safe, nuclear keys kind of thing? Like, is there a product like that? And there's no product like that. So I had to go build that product. And I'm really happy about it because I feel so much more confident in my ability to deliver like quality custodial experience around the loan product, which is already live and has a bunch of customers. I feel so safe about that product because I had to go engineer this. And it's been great because now I can go turn around and I can say this thing that I've built, which is a multi-person cold wallet, hardware wallet backed custodial model, is now itself a product. And I'm really excited about that because I'm a hardware wallet user. I'm a Trezor diehard, but it kills me that sometimes I'm like, so you could come into my house or my place of work, and if you were lucky and I had my Trezor on me and you were violent and I am not brave, like I'll give you whatever you want, you know, like it's a weird model. Like no one, right? I don't worry about my brokerage account. I'm like, God, what if someone comes in here and demands all the money in my brokerage account? It's like, they won't. That's not how it works. They know that they can't go to your house or place of work and attack you as a person and get your brokerage assets. That's not possible. But it is possible with crypto, and it's happened. Like we've seen it online on Twitter. Like a lot of the people that you and I are connected to are like experiencing this rather scary physical violation of their safety and their personal space because people believe that they can get at these digital tokens. And by the way, I don't accept this honeypot thing that Trezors and Ledgers do. I think it's very cute that you can be like, oh, I'm being attacked. Let me put in my fake PIN, and I only have $200.
Yeah, like
you're like. You're the founder of this cryptocurrency exchange, idiot. Like, shut up. You don't have $200 of Bitcoin. I know you're lying. I know it's a honeypot. It's like, that's a cute protection. It's not a real protection. The real protection is choosing who to trust. And I think that's the remarkable thing about crypto is like, it gives us the ability to be self-sovereign, but at the same time, it allows us to choose who we would like to collaborate with.
And wow, that was powerful. I think that's truly important. So like what gets talked a lot in Bitcoin and crypto circles is webs of trust. So that's like you find people
That's it.
trying to develop webs of trust where they can set up multi-sig situations where it's like, hey, if shit ever hits the fan, like, can I depend on you?
And multi-sig is stupidly hard, man. Like, for a variety of reasons, some of which are reasonable, other which are just historical. It's hard. And so part of what my company does is as we invest in our own internal multi-sig solutions, we open source them. We've not open sourced our Bitcoin solution yet, partly because it's P to SH and everyone can do P to SH. We're going to, but it's not happened yet. But we have already open sourced our Ethereum solution. So we are about 10% of our loan book is in Ether. We've had to develop our own smart contract to be able to custody that Ether effectively. That smart contract has run through a massive...
what was the process of auditing that like?
We had it professionally audited. We used a firm called HODL. They did a great job. It was actually the first contract they've ever audited that had zero problems.
Boss.
And part of that is, yes, we're awesome, but another part of that is we designed our contract to be so dumb. Like, it's not a smart contract, it's a dumb contract. It's like your one job contract is keep the funds safe. Like, something I noticed when I was looking for an Ethereum smart contract that would be essentially a multi-sig protection of funds in Ethereum, like a vault, right? Like, I saw BitGo's, I saw a bunch of other ones, and I'm always just like, this is too complicated. Like they have functionality that's like, change the owner of this. Why do you want that? Why do you need to change the owner of this contract? Like, by even allowing that functionality, you've created all these weird holes. If we all recall, how did the parity hacks occur? They occur via methods in the constructor that weren't sufficiently well thought about or tested that allowed changing of ownership or changing of the rights of various owners. Don't do that. That's not a thing that you want. Like, that's not a feature. That's an anti-feature. Like, that's a bug. And so we designed a super simple Ethereum contract. We had it audited by Hosho. It passed with flying colors. We've been running a bug bounty for about 6 months. That's a $150,000 bug bounty.
Oh, damn.
No one has ever contributed an actual bug because at the end of this contract has almost no code, right? It's one of the simplest contracts you could find, and it works incredibly well for multi-sig access to Ether. But what we did alongside of releasing the smart contract, which is totally open source, we're the only lender, by the way, that actually open sources and audits their shit. Everyone else does not. Alongside doing that, we released a DApp. Right. So right now you can go to ethereum-multisig.unchainedcapital.com. You can read our blog post. There's links to it. You can just use it. You don't have to work with us. You don't trust us in any way other than our code. Like, you can pick a web of trust. You can plug in your hardware wallets. You can build a multi-sig Ethereum contract. You can keep your shit safe. And
that's incredible.
And we're about to release the same thing for Bitcoin. And like, part of it is, this is just a good thing to do. This is just a healthy thing to do. Like, right? I want this. I want to use this. I want to work with my dad and my family. And like, I want us to collectively protect each other's assets because we trust each other. I want to make that easy for companies to do with their customers. And in particular, yes, I want to sell that as a service. If you would like us to be part of your web of trust and be key holders, we'll protect you. We've already got a whole scheme worked out. There'll be more details landing next month. There'll be a whole press release, etc. But like, the root idea here is everyone presents cryptocurrency like it's adversarial, and it is. It's extremely adversarial. Like, it's what gives it so much strength. But there's a flip side, and it's cooperative. Yeah. And too often that's ignored. Like,
cooperative in the fact that, like, hey, like, I have your back. You're my boy. Like, we're gonna.
Not only that, but like, think about how we've all learned. We've learned from guys like Marty. We learned from listening to podcasts. Hey, this is a great show. Listen to this. This is a great article. This is a great guy. Like, read his stuff. Like, we've all learned from cooperating and like crowdsourcing the best information. My friend Tushar, like from Multicoin in Austin, has such a great line about this, where it's like, the process of understanding Bitcoin and blockchains is like a blockchain. And so we all check out the same Genesis block, the same core ideas, and then we proceed with the same inductive reasoning. And for a while, it's the exact same. Like, every person who's doing that, okay, private keys, cryptography, like proof of work, okay, I get it. And then we have to replicate each other's reasoning. Like, it's not about believing what you said. It's about taking your fundamental axioms and hypotheses, and then myself running, quote unquote, the algorithm to reason and arrive at the same conclusions you have. And in general, it's a process that creates consensus because we all agree that certain things like strong cryptography, good consensus algorithms and so on are valuable, but it can also be contentious, that we can fork, that reasonable people can disagree in their reasoning about what makes blockchains or currencies valuable, and we can have a healthy heterogeneity of options. But I love that idea that no one is just accepting, everyone is on some level recapitulating their reasoning, right? It's such a cool idea. And I think similarly, when we talk about, custody, everyone's recapitulating a process on how to be safer, right? Like when you start with a little bit of Bitcoin, it doesn't matter, use an exchange. The first Bitcoin I ever bought was on Coinbase. That shit stayed on Coinbase for a long, long time. I didn't know how to do better than that.
As it should probably, and it's a learning experience.
It is a learning experience, but that's the cooperative aspect. We learn from each other, and to pretend that crypto is 100% adversarial and we're all out to screw each other is false. We've designed for that universe because that gives us strength, but truthfully, it's incredibly cooperative. We spend so much of our time and energy learning from each other. It's natural that we should extend that into picking subsets of people we truly trust and endowing them with the power to help administer our own funds.
And this reminds me of my favorite sports analogy to make in this arena in particular. So I played lacrosse, and one of the tropes that my high school lacrosse coach used to, not physically but mentally, beat into us like every practice, is you're only as strong as your weakest link.
Sure.
So I feel like everybody is trying to make, it's funny that we're talking about blockchains and like a link in a chain, but everybody is out there trying to make every link in the chain that we have as strong as possible, because at the end of the day, if there is a weak link, like, it is going to be exploited. So it is in our best interest to bootstrap everybody's mental capacity to know what's going on in this space and get everybody up to speed, because it'll make the network stronger at the end of the day.
It's something that, like, another analogy for that is like physical security. I think as city dwellers, we sometimes miss out on this because we're so centralized, right? So much of our security is 911, and the idea of the centralized police forces and the various other like government organizations that we don't have to collaborate with or necessarily directly trust, but in some sense we're beholden to / are beholden to us. Whereas if you go to rural communities, that's not how it is. No. Cops are not going to show up there in 2 minutes. Like, your security comes from knowing your neighbors and being friendly with them and trusting them and depending on them. And that is almost always how life has been lived in human history, that are hyper modern, hyper urban. We don't know our neighbors, and we don't know who to trust except for what we looked up. Is kind of weird in retrospect. Like, really, most of what constitutes human security for many thousands of years has been personal relationships with those who are near to you, that you trust and you love.
I forget what comedian it was, or which comedian it was, that made this analogy. But like, living in cities, living in apartment buildings, it's like you're living in an ant farm, but you don't like know the other ants at all. Like, I don't know any. I'm guilty.
No,
I live in a
guilty as charged. Same.
I don't know my neighbors in my apartment building, but I go home to where my parents live in the suburbs of Philadelphia, and I know every neighbor. We say hi. If they're garbage cans at the corner and nobody's driven it back yet, I'll pick it up and put it behind their house. Like, if my parents are gone for a weekend and they need our neighbors to watch the dog, they're there to take them for a walk if it needs to be. Like,
and it's like so normal on some level of discourse to like behave that way. It's a very like American thing. Like, everything you say is so fucking American. Great, perfect, love it. But like, on another level, it's like, why is that so alien to us when we contemplate the internet? The internet is this place where everyone is in this massive apartment building where no one trusts anybody, right? Except for idiots who are noobs and will get hacked, right? But I think that's what's cool about crypto is so anchored in reality. It acknowledges that, look, at the end of the day, we're physical creatures. Like, things cost energy. Like, violence is real. Like, if you can trust people, if you have people you really trust, like in terms of like human to human trust, you can make structures which are digitally incredibly hard to break.
And yeah, like, so the web, like, you freaks that haven't dove into like the web of trust research in Bitcoin and like ways to secure your Bitcoin with the web of trust, like, seriously look into it. Like, if there are, but the hardest part is developing that trust.
I've not found any person who has a large amount of Bitcoin or any cryptocurrency who's sophisticated, who hasn't ultimately backed into the way to keep this safe is there are real humans that love me and care about me that I will choose to trust.
Exactly.
That's just it. That's the only way to do it. Humans or people that you pay that are incentivized the same way as you, and ideally a mix of those.
Yes.
Right? So you have some mix of people that are just normal humans, and then some mix of those who are also part of your web of trust, who are paid to be part of it and have a certain SLAs around what they can and cannot do. And I think one of the future evolutions is we've gone from this very like feudal system of like literally we're like stashing gold in our goddamn chariots as we move from place to place to this more networked world where like, yes, and IOUs and sort of fractional banking and those kinds of ideas will show up again because webs of trust allow you to build those things, and those things aren't inherently evil. They're evil when they're not transparent.
Exactly.
Right? So if you can make those things transparently and you can let us be arbiters of who we choose to put into our web of trust, like what an exciting world to live in. And what a fair representation of how humans truly build relationships. Right? I'd way rather trust humans that I know and love than personal corporations.
Yeah, like Bank of America, like who charges you $12 a month for a maintenance fee on software that they don't even touch.
And whose college savings account I'm afraid to close since it's my longest running account and would impact my credit score. And like, why am I beholden to these people? I hate them. I don't know who they are.
Right? What a beautiful conversation we've had. How far are we in?
I don't know. We're running out of booze, though.
Well, I think we're out of booze. We're an hour and 40 minutes in.
Wow, that's so long.
Do you... I guess we should wrap it up. Do you have any parting notes? Like anything you want to hit on? I'm trying to think. You want to go to space? Like, let's get cosmic. Like, why?
You want to get cosmic?
How do you want to go to space? Like,
Dude,
what part
I'm
of space
so
do you want to? Do you
glad
want to go to the moon?
asked.
Do you want to go to Mars? Do you want to go to another galaxy? Do you want to go?
I want to go to space, but I'm afraid of normal flights. So I feel like if there were like an actual like, hey, you can go to space, dog, it would be like, B.A. Baracus, like, can you knock me out before you put me on that flight? 'Cause I'm not going to go. On some level, I'm just a big bullshitter. But I will say, I've had a couple threads about this, which are kind of weird on Twitter, which maybe if you're curious, you can investigate. But I'm a huge sci-fi nerd. As you can imagine, I'm a former physicist, like space and aliens and warp drives and Einstein's theory of gravity are like all things I spent way too much time thinking about. And for a long time, I always assumed that why are we not in space? Why aren't we at Alpha Centauri? Something that Vinay Gupta said, which I really love, is like what happened in the 50s is that we took the nuclear concept and we put it at the wrong end of the rocket. Like we put it at the tip and not the base, right? Which is to say we created nuclear weapons, not nuclear engines to help us get to neighboring stars and other places in our own solar system. So I love that idea. I love that statement. Had we done that in 1950, had we just thrown nuclear engines, real hard, Project Orion, right? Like thrown them on the back of spaceships and just blown the shit up out of those nuclear, we would be at other stars. Like that's our
other stars.
We would be at other stars today.
Really?
By now. Yes, by now. Like it is within human capability to just launch a bunch of nuclear weapons and get a small payload to another star on the order of decades. Like we've known how to do that since 1950.
Really?
So. Yes.
To another star?
To another star.
How close is the closest star to us?
Extremely far away. One of the best way, I hired this one recently, which is, I think this is a beautiful way to visualize it. If you buy like a bag of like salt, like iodized salt crystals, right? Like that bag has on the order of billions of salt crystals in it. That's roughly how many stars are in our galaxy. And if you sprinkle out that bag and you pretend that each salt crystal is like one star, and you take one and you put it on your counter and you say that's the sun. Well, how far away is the next nearest salt crystal, which represents Alpha Centauri? Answer: 7 miles away. That's wild,
From
right?
where you drop it on the table?
So you take one of those salt crystals, you put it down there, and the next one has to be 7 miles away. And then that whole bag...
At scale?
At scale. That whole bag has got to be spread out over this massive volume of space in order to look like the galaxy. But that's how far away stars are. But we could have got there. Like if we'd taken all the nuclear weapons we've made and we'd put them on the back of a rocket instead of the front, and we'd launched that shit in 1950, we'd be there by now. We'd have pictures. It'd be awesome. So like,
holy shit.
We didn't do it because I guess we had wars to fight or whatever. We had stuff going on. We never got it done.
We had bad leaders.
Bad leaders, perhaps. But what I would also argue is like, like the void between the stars, it's a void of matter, but it's like a void of incentive too. There's nothing there. Like why go to that star, or why spend all this nuclear energy to go there? It's foolish. Like why do it? And then further, like even though you don't know why, like the other question that crops up is like, say you had actually done that, and like let's even go further. Let's say 100 years from now, 200 years, there are humans out there. There are humans at that other star. How does it work? Like money, you know? It's like never a question I've ever asked before, which is fucked up because like I watch a lot of Star Trek and I love space movies, and I'm always like, oh, it's so cool, Corellian ale, you're buying some at the cantina, that's great. But like if you think about it, what did you use to buy the Corellian ale? You know, like where'd the money come from?
People think Bitcoin's a good intergalactic money. You can set up node propagation systems.
As it is, I think it would need some changes. But what certainly is bad money is everything else. Like you cannot have money that's defined by a database and have it work. And this
tell me a show with a greenback with Lincoln on the front. They're not going to accept it.
Well, because it's this weird issue of like information transfer, right? Mm-hmm. Like if you leave Earth and you're headed to Alpha Centauri and it takes you, God, I don't know, 10 years to get there, right? Whatever, nuclear engines or some crazy shit. What if you just spend all your money on Earth before you leave? And then you're headed to Alpha Centauri and you get there and you re-spend it because they don't know that you spent it on Earth yet because it takes 4.5 years for light information to get there. Like the universe is so fundamentally local, and one of the reasons I think the universe is fundamentally local is like God doesn't trust us. He thinks we fuck shit up. You know what I mean? And it's just like, you know, it's a great way to keep everyone safe. Just spread them out. Just like keep these humans way far away from those Alpha Centaurians. And if these guys do some idiotic shit, it won't affect them. And so as a result, the universe is extremely spread out. But what that creates is it's extremely hard to synthesize or integrate information at a cosmic scale. It's so hard to know that this person hasn't just sent a signal way the hell over there because of those multi-year light separations between those places. The only solution, and I never pondered this before because I never ever thought this was relevant. I was like, the hard part is getting there. I don't want to hear about the money. The hard part is getting there. But recently I've sort of inverted and been like, we already know how to get there. Well, we just need to strap a bunch of nuclear weapons onto this thing and do it. We just need to do it. The hard part is the money. Like, what is there that's valuable that we're going to want to make money from? Like, you can't bring anything back with you. That makes it extremely hard to trade. Like, you can't, like, it's not going to the new world to bring back spices and tobacco and potatoes.
It's not the old Silk Road.
Like it's something different than that. There's nothing you're going to bring back from there other than information that you can even transfer over that distance. So it's not you can trade very easily. So it creates this vacuum of incentive, just like there's a vacuum of matter. But like whatever, say that you even had a reason to be out there. How do you build economic systems that bridge parts of the universe that are years apart in terms of communication time? The only solution is you invent a long-term integration layer, which is to say you have this process by which there's a period in which all transactions that need to be counted are like allotted and grouped and then confirmed. And that is a blockchain. And so it kind of feels to me like I've spent so many years thinking about like, oh, how do we get better fusion engines and how we do all this stuff? And like maybe what I need to think about is like, how do we build a system that truly can incentivize like groups of humans to like leave like our little area of the universe and head out on their own and still be economically able to transact with us.
Maybe that's what's been holding us back, is like,
I think it's one of the things that has been, and I never appreciated it until like I could understand Bitcoin and realize that it's not exactly Bitcoin because of the 10 minutes and the whatever else, but like some tweaks. Like there's a version of that idea which does work, and it does work to create, like, you know, like 100-year-long block times that are capable of integrating economic activity amongst the most nearby stars.
It sounds like a good side chain in the future.
It's a totally fascinating problem that is irrelevant, and is so in the spirit of Bitcoin. It reminds me of how I got into Bitcoin, which is just like, here's this problem which I think is irrelevant, and it turns out I'm wrong. It's totally relevant and really important, and by not ranking its relevancy correctly, I missed out on 2 years of owning Bitcoin. So a little bit, I'm just like, I'm no longer making those claims. I think all problems are relevant.
All right, so Dhruv and I are starting an intergalactic space company after this podcast.
Indeed, yes.
What if we are the smartest civilization in the universe? Would you be happy, sad, surprised?
I think about it a lot. I saw a great YouTube video recently that was like, what if most civilizations in the universe, most life in the universe is like living in these little frozen moons. Like we look at our solar system, and there's Earth. Earth is great, but like where else is there water? So far, we think it's on these frozen moons of Saturn and Jupiter, right? Like Europa and Enceladus. Like it's really hard to light fires and do metallurgy if like you have fins and like you're enmeshed in like ocean, right? So maybe that's what's remarkable about humans, is that we live on an air-based planet. We can light fires. We can make do metallurgy to create silicon circuits, to build computers, to create truly relativistic financial systems that create the economic incentives to cause us to really expand across the galaxy. So maybe von Neumann probes don't exist, not because they're impossible to make, but because the economics are stupid. Until we develop this. I don't know.
Holy shit. That's why you gotta enjoy life, people. It's precious, right?
Indeed.
Is that what we're getting to at the end here? That's what I think. Like, enjoy it. Like,
enjoy it.
Hopefully Bitcoin makes you appreciate it more to an extent, or appreciate what you have, or might.
It gives me a viewpoint that is crazy, right? Like, what if are we really building a system of money that's going to last for thousands of years, and thousands of years from now, they're going to be able to come back to our Genesis block and look at it and like ask questions about Satoshi?
Right.
That's wild. If that's true, like, gosh, like what's the only comparables I can think of are like, you know, I don't know, John and Mark, like the apostles who wrote the Bible, right?
Yeah.
Or someone who built the pyramids, or whoever invented zero, or like
I'm telling, like,
some weird shit, man.
And again, like, we don't want to get too far ahead of ourselves. We don't know if that will come to fruition. But again, like,
look, I hate being wrong, and so I'm so reticent to, like, I've for many years never told anybody that I know that they should buy Bitcoin, because I just don't want to be responsible for any sort of pain or regret on their part. I'm just not interested in it. Recently, I've been reconsidering that. And I've been telling my dad, you should buy some Bitcoin. I've been telling some folks in my family, you should get into this. It's a real thing. I no longer feel so bad. And I feel like even if the price goes down, it'll come back up. And I have more confidence in it. So I'm starting to believe in this thing less ironically. I'm believing in it less ironically. I don't feel like every time I say it could be a big thing, I've got to hedge it with, but I could be wrong. Like, yes, I could be wrong, but like less and less does that seem the case. But then this starts to touch on what we were talking about previously. Like, are we really such a lucky generation that we just happen to be the right age, the right time that we got into this? Like, are we, we're like war profiteers, or like, the folks that were in Reconstruction after the Civil War, we just like happen to be here at the exact right time to make bank?
No, but it's happened throughout history, so maybe we are, and maybe we'll be rewarded for being the few people on Earth that recognized that while it was going on.
On Earth or nearby?
Who knows? Well, that's another theory. Some people think Satoshi's an alien that noticed the strife going on Earth and bestowed upon us a perfect money.
What a remarkably like nerdy economist version of Star Trek, where it's like the prime directive is not we shall show up and do nothing and let them observe. The prime directive is like, once they get sufficiently advanced, we'll just show up and teach them about blockchains, and then that'll help them hook into like a universal economic machine, and then we can exploit them for their resources. And
it's the complete opposite of what I described. Like, maybe we're the dumbest civilization in the universe, and this is a Turing test to see if we can join the universal economy, if we can handle these blockchains. Like, all right.
That's a good question. Is it more depressing to be the first, or like to be alone?
Right.
Or to be like way the last, and you're like not even interesting because everything you've done has been done by some other crappy alien before.
Yeah. I would say that the first scenario is more romantic, of us being the smartest civilization in the universe. But it's also a good thing if we're becoming smart enough to join the universal economy, and it's a good check mark to check off,
Check plus.
All right, we're almost 2 hours in here. What else? This has been one of my favorite conversations I've had in months.
Thanks for getting me really drunk, Marty, and let me talk about aliens on your TV show.
I can tell you're drunk because this isn't a TV show. You're not going to be on TV at all. Don't worry.
What's all the cameras for then?
Yeah, we took our shirts off and recorded this. Like Kevin Famine at Chris Rose. But no, I'm kidding. I kid. That was incredible. Do you have a parting note? Anything you want the freaks out there to know? Any tips, any advice, anything about Unchained?
We've been here for almost 10 years, but so early. I feel like rules are just being figured out. There's already pressure to think like other people and to accept what thought leaders tell you and to accept what the powerful and those who've established themselves tell you. And I never accept that. I feel like this whole industry is built around the idea of thinking for yourself and being independent, and yet because we're monkeys, we're so eager to be told what to do. So the only parting note I have is don't listen to anything that Marty or I have ever said. Just think for yourself, come to your own decisions, weigh the evidence, decide.
I think that's the best parting tidbit we've gotten on this podcast. Dhruv, it's been a pleasure. Thank you for coming by.
Thank you, Marty.
Off the flight in the studio. Very admirable that your mind was that coherent.
I drank on the plane, man. I was prepared.
That's all we got for this week, freaks. You tell them drunk. Peace and love.